today at philsgang.com.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
Bye. Welcome to Phil's Gang. All right, this is our podcast we do every day at this time, giving you hopefully good information. My name is Phil Grande, and again, since 1998 here at Phil's Gang, we've been teaching folks just like yourself, the retail investor, how to do better. Okay, it's not that difficult, but 90% of the retail investor is losing money day in and day out. It always occurs. So you have to get some help. We're here to help you. The biggest help, is to identify when there's going to be market changes. You just don't follow the crowd. The biggest help is you need when the market does turn and does go down and does break, that you're positioned to sell short. That's your protection, not to buy Coca-Cola or Pepsi or any of these so-called safe stocks. You have to short. Okay, let's get started. So it's official that rate cuts will not entice companies to hire, according to the ADP. Now, remember, we didn't get our number from the BLS because of what's going on in the government, the shutdown. This shutdown is a joke. I mean, do you really understand what's going on? I didn't, and I finally looked into it, and I said, what the hell is going on? And it's ridiculous. And I want to spend a lot of time on this, but it's just ridiculous. So, again, it's all about giving. All right, let's back up. When you go back to the COVID, and we had the COVID crash, and people were out of work, the government put in this emergency bill to give everybody free health care, especially the undocumented workers. Okay, the people who shouldn't be in this country, who came here illegally, they would get health care. So they want to take that out now. The Republicans want to and they should take that out. Why are we giving them free health care? People who are not Americans, people who cross the border here illegal. Okay, and this is what they're fighting over? What are you, nuts? This is insane. So now remember what happened during that time. Remember, I told you about this, that if you were an American or not an American, if you're illegal or not, or illegal or legal, you got a whole bunch of money from the government. They sent you check after check. You didn't have to pay your rent. You didn't have to pay your car payment. You didn't have to pay your school payment. The government took care of you. If you had a house payment, don't worry, you don't have to pay it. If you had a rent payment, don't worry, we'll pay it for you. I mean, it was insane. And healthcare. Oh, don't worry. You're you're not legal. Just came over the border. Don't worry. We're going to take care of you. They had so much money, these people. Okay, that's how the economy grew. They went out and they went on a spending binge. What are you, nuts? This is insane. They went spending like crazy. Okay, now they want to take that part back, the part where we're spending billions of dollars on free health care for people who are not Americans, who if you go to the emergency room, you got to sit and wait 2 hours, sometimes 3 hours, because in front of you is a bunch of illegals. That's not right, but that's what's going on. Are you nuts? That's insane. Back to the stock market. Okay. This is what really grinds me right here. When I listen to this garbage, this gal right here, listen to this.
Companies are strong. Lowering rates is only going to strengthen them.
Okay. It's lowering rates. Remember, Powell said, I'm going to lower rates so companies will start hiring. No, I told you that was not going to happen. That is not the problem. Lowering rates. Companies don't need lower rates. They need confidence. They need confidence that the economy is going to do well. They need confidence that people aren't going to be filing bankruptcy. We got the highest bankruptcy filings than ever. No, they need confidence. They don't need a rate cut. They're not going to hire anybody with a rate cut. That's stupid. But that's what he did, and you heard her lying. No, it's official. The rate cuts will not entice companies to hire. The labor market's getting worse. The ADP number that came out in September was expected to gain 50,000 jobs. We had a net loss of 32,000 jobs. Again, they expected 50,000 brand new jobs. No, we had a net loss of 32,000 jobs. You think cutting a rate a quarter point, companies are going to hire? What are you, nuts? And the most important business, they're the small, mid-sized businesses. That's where you get a good job. It's not the big business. It's not Apple. It's not NVIDIA or Google. It's the small, mid-cap business. That's where your best full-time job is. That's where your best benefits are, and they are hurting. They're getting crucified. They're getting killed. They're not going to hire anybody. I have a lot of my friends own small businesses in Sarasota. They're dying. They're dying. People have no money. So the new hires hit a massive annual decline, according to ADP, of 54%, 58%. So what's with the rate cut? Oh, it's supposed to stop that, remember? So Powell said, I'm going to cut rates and the declines will stop. No, it didn't stop. They increased to 58%. So the economy has not seen such a slow pace of hiring since 2009. But why do they come out and lie? Why does this woman keep coming out on CNBC, okay, and just keeps lying through her teeth? Unbelievable, right?
Yes, the economy is strong. Companies are strong. Lowering rates is only going to strengthen them. Companies.
They just lie. They never tell the truth. You know, I was thinking about this too, that, you know, everything's AI. Well, there's some things that should be left alone that are old-fashioned, okay, that are old-fashioned. Like, for example, I was telling my members today, you know, the biggest thing that helps you if the market is going to correct, watch transportation. If transportation on your chart starts going down and the S&P is going up, it works like a charm. Means you're going to get a correction. You always do. Yes, that's not AI. It's old-fashioned, but it works. It works. The other thing that's old-fashioned, that's not AI, is gold, okay? Gold tells you what is going on when you have a gold ratio, and I'll talk about that in a moment, okay? But the ADP reported that the private sector eliminated 32,000 positions in September. That's a warning sign, for God's sakes. A warning sign. Red. Can you imagine? Private sector eliminated 32,000 positions in September. That's a warning. So markets were predicting an expansion of 50,000, not losing 32,000, but they keep lying to us. Private payrolls for August were revised to show a loss of 3,000 jobs, 3,000, after we were told we're going to gain 54,000. More lies. Why do they lie like that? Why do they say we're going to gain 54,000 when they know we're going to lose 3,000? Because they just lie. They enjoy lying, I guess. I mean, geez, give me a break. What are you, nuts? Wages in September fell to 6.6% from 7.1. I know that doesn't sound a lot, but that is huge, 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 month over month. So all we keep hearing is all-time new highs in the Dow, new highs in the S&P every day. You know, and every day we got this open AI deal with Oracle, this open AI deal with AMD, and every time you get a deal with one of these semiconductor companies with open AI, bam, AMD, boom, up. You know what? 25%. Oracle, boom, up 25%. All they have to do to move the stock market is just keep saying, hey, we're going to do a deal with OpenAI, even though they don't ever do the deal. It's just like stock buybacks. They'll announce 100 million share stock buybacks, but they never do them. But the market, boom, takes off. That's what they're doing with this AI crap right now. They're announcing every day all these companies are going to do a deal with OpenAI, and most likely they won't even happen. But who cares? We follow the money. I don't care what they say about the market. I'm not a police officer, not here to arrest anybody. Follow the money. Just keep following the money. And when you follow the money and you follow pricing, you're never going to get caught. We go, oh my God, look at this, my stock's down. The only people who get caught with their stock down and losing money are tourist investors, the tourist investors. And who are the tourists? I call them terrorist investors, but we'll say tourist investors. Who are they? They have a gambler's mentality. They're impulsive. They're driven by fear. I'm going to miss out on that stock. I got to buy. They always buy right at the top, right before that stock crashes. They lack any kind of discipline. They have no discipline. And they have the inability to detach themselves from reality and just go on hope and hope. And they chase losses. It's amazing. They'll keep chasing losses. They never will cut them. They chase them. The first thing you learn when you're with us and you're a gang member, cut your losses quick. Boom, cut them. Boom, get rid of them. And the fewer losses you have, the more money you're going to make. The fewer stocks you trade, the more money you're going to make. But no, these are gamblers. Tourist investors are gamblers. They love risk-taking. They love leverage. They owe all kinds of money, okay, on their margin accounts. Unbelievable. We've never seen margin accounts over $1 trillion. We've never seen that, not even with the dot-com days. And they have this false sense they're lucky. They got luck. So those are called tourist investors or terrorist investors. That's not the retail investor. The retail investor is just the opposite. He wants to learn, especially how to protect yourself when the market does turn around and correct or crash. And it will. Who knows when? They could keep taking this market and keep running it for years. As long as they can keep making another announcement that, oh, I see, okay, Taiwan Semi just did a deal with OpenAI. Boom! Stock goes up another 25%. They can do 10 of these a day. You know, keep the market going up and up and up. And that's fine, because we follow the money. We're not here to judge the market. We're here to follow pricing. Pricing, that's what you got to follow, is pricing. We'll show you how to do it. Pricing, that's what's important. That's what you follow. So, again, the only reason that the market is rallying is because we have this record increase in money supply to fund the record increase in stock buybacks. Wall Street increases are, just incredible, the money that they're putting in this money supply and the money they're putting into the banks to give to the CEOs to buy their own shares. It's just gotten nuts, gotten crazy. So, now, the big problem we're having is that the dollar, okay, the dollar. I mean, look what's going on with the dollar, UUP. I told my members, we took a position today on UUP, that's our dollar. I said, let's just put a scout on so we don't forget about it, because UUP has been basing now, if you put your chart up for 6 months or even a year to date, you can see we've been basing since August 17th, 2025. We've been going sideways. So the high's been around 2770. We hit once, twice, 3, 4 times, and then the low's been around again. The low's been around, let's see, on average probably around $26, $26.81. So we got a perfect pattern here. We're above the 25-day moving averages, above the 50-day moving averages. All these pros have been shorting the dollar since December 18th, 2024. They got to buy those shares back. They have no choice. They got to buy them back. And when this dollar starts soaring, oh my God, okay, you're going to see gold tank. You're going to see gold tank. So if you want to know when gold is going to turn around and go back down, and we bought a ton of gold mining stocks, okay? But we're not going to be surprised. We're going to know when gold is going to turn around and go against us. Here's one reason right here. You're watching the dollar. You're watching the consolidation. You're watching it start going up. When that dollar starts going up, gold is screwed, okay? It's going to come down. So, but that's what you got to watch. So be very careful, watch your gold, and that will, if you're in gold right now, watch your dollar. Watch your dollar. If that dollar starts going up, that dollar starts hitting around $28. That'll get you above the 200-day moving average. That's resistance. That means it's going to go much higher. It'll take down your gold. If it doesn't go up and get through that $28 area, then gold will keep going up. You got to remember, if you watch the dollar, it's got to get above that $28, okay? If it gets above that $28, then gold will come down. Otherwise, gold will keep going up. Hey, I'll be right back with a lot more.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand. Especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Welcome back to my podcast, philsgang.com, where we help the retail investor just like yourself how to maneuver the market, how to make money when the stock market's going down. That's when you make most of your money. That's right. It's called shorting because stocks go down 10 times faster than they go up because panic sets in. And everyone on Wall Street always tries to convince you, oh, you got to go and start buying defensive stocks. You got to buy Clorox. You got to buy cigarettes. You got to buy Coca-Cola. That's a bunch of BS. Bunch of BS, okay? There's no place to hide. Shorting is easy, especially with our charting. We have a chart that I designed 25 years ago. Over 225,000 people have used this chart. It works, okay? It helps you. It assists you, okay? It's not AI. It's old-fashioned. Hey, where the hell's the money going? Hey, what's the pricing of my stock? Is it going to go up or down? It's the old-fashioned way. You have to earn it, okay? And that's what we do every day. Now, think about this. All we keep hearing every day, new highs, new highs, new highs. I think I have a cut here with that, don't I, Willie? I can't see it. Play it for me. New highs, new highs. It's all we hear.
We are at all-time record highs for... You ready for the list? Stocks, home prices, Bitcoin, gold, money supply, debt.
Everything's up. Everything's up. Wow, isn't that wonderful? What a bunch of nonsense that is. So, when you hear the Dow is up almost every day, the S&P is up almost every day because AMD is making a deal with OpenAI, or Oracle is making a deal with OpenAI, or Taiwan Semi, or whoever. Okay, it's a joke. Okay, now, when you hear that, it's important to remember to look, again, this is not AI crap, this is not AI, this is the old-fashioned how to trade. What you need to look at, okay, is the Dow to gold ratio. Just like I was talking to my students today about watching the transports to the S&P. When the transports start going down and the S&P is still going up, that means the market's going to crash, and it always does, or at least gives you a correction. Never, never is it wrong. It's the old-fashioned, following the money. It's another old-fashioned, no AI crap. This is, hey, listen, man, look at, you got a ratio. Follow the Dow to gold ratio. Once it's above 15, like it is now, okay, once it gets above 15, that means it takes 15 ounces of gold to buy the Dow 30, meaning gold is undervalued. Why do you think gold keeps going up every day? Gold, 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 every day. Everybody's buying gold. Pension funds, mutual funds, hedge funds, banks, insurance companies, all buying gold because they can see what's coming. The value of the dollar has gotten crushed. The value is just terrible. The value of the dollar is just crushing us. And it's going to get worse and worse and worse, okay? So, but if you want to know, are you paying too much for the S&P? Are you paying too much for the Dow? Just look at the ratio of the Dow 30 to the gold ratio. If it's above 15 like it is now, it's telling you, man, forget your S&P buying that, forget your Dow, you better buy gold. And why do you think we have the smart money in gold and we have nothing but the terrorists, okay? The tourist terrorists. They're in there buying every dip. Every dip. They keep buying this crap. Every dip. That's all they know because they're gamblers. They're gamblers. And gamblers are upset when they missed an opportunity. So they jump in. That's their makeup. They jump. I'll show them. I'm smart. I'm going to jump in right here. The stock was at 30. Now it's an all-time high at 80. I'm going to jump in here at 80, the high. That's what they do, and they always lose money. So remember, you want to watch your ratio, okay? So again, the Dow to the gold ratio. If it's above 15 or more, then it means gold is still undervalued and there's going to be still a lot of institutional buying, okay? So please remember that. It'll help you. It just means that gold is undervalued right now, okay? And that's why smart money, institutional money, the pensions, mutual funds, hedge funds, banks, insurance, they're all buying gold like crazy, okay? They're not stupid money. They know what's going on, so they're buying gold, especially the central banks. Why are all the central banks buying gold? They're dumping these AI stocks, especially the semiconductor stocks. They're dumping them left and right. But we don't see it on a chart because you have the crazies, you have the tourist investor, doesn't know what he's doing. He's a gambler. He's impulsive. He's driven by fear of missing out. He lacks any discipline, and he keeps jumping in on every dip and starts buying. What's he, nuts? But that's what he does. So institutional money is smart. Institution money is smart. They don't make all the money because they're stupid. They make money because they're smart. Okay, they understand how the market works, and they know, okay, how sensitive is this ratio, okay, of the Dow to gold. So you got to watch that ratio. And as I say, like today, if it's above 15, that's a buy signal, okay? Now think about this. In 2001, the Dow 30 hit its landmark. Remember this? Double digit, 10,000. Remember that? Everybody was celebrating. Wall Street was celebrating. They partied for 3 days on Wall Street. Whoa, 10,000. Oh, look at this, 10,000. They went nuts. But measured against gold, if you look at the ratio, the Dow 30 was worth $40 an ounce. Okay, now let's look at it today. That was in 2010. Today, the Dow 30 is worth half that when measured in gold. Half, about $20 an ounce. What does that tell you? When you hear these people tell you how great everything is, remember, your ratio, your gold is telling you just the opposite. It's telling you, put your helmet on, brother.
Companies are strong.
Companies are strong. Bankruptcies are up 40% since January. Yeah, they're really strong, all right. So, again, the Dow 30, measured against gold, its worth has dropped by half. By half, the Dow, from 40 to 20. Isn't that amazing? Okay. Now, another thing. Let's talk about what's going on with this dot-com bubble that we're in. All right. It's a massive bubble. It's a massive bubble. Okay. And people are going to pay dearly, just like they did with the dot-com bubble. Okay. So, again, I told you yesterday, this is all hype. This whole AI is hype. I've never seen hype like this. They brought it to a science, this hype. They know how to hype these. I mean, think about it. All you got to say is, I'm doing a deal with OpenAI and your stock goes up 25%. Then they go in and do stock buybacks. Where do they get the money for that? It's printed by Treasury Department. The Treasury Department gives it to the Fed gives it to the banks give it to the CEOs, and that's how they do stock buybacks. So it's a con job. But it doesn't matter. Let's stay in our tech. We're not here, okay, to find God, okay, in the stock market. We're here to follow the pricing. And you got a much better opportunity to make money in the stock market when it's manipulated, when it is rigged to the upside. And think about, all you hear is new highs, new highs, new highs. In fact, last year, the S&P 2024 had, I think it was 47 new highs. I think I'm right, 47 new highs. This year, year to date, I think it's something like 26, something like that. But everybody here is new highs, new highs. Oh my God, I gotta buy, right? No, you gotta follow the pricing. The pricing is telling you the opposite, and then you'll make money, okay? Now, let's take a look at some of our stocks here, okay? Now, one of the stocks, now take a look at Tesla. Now, people are going nuts with Tesla. Right now, I had my members, I told them when Tesla dropped, by the way, when Tesla had this big pullback, I think the pullback was around June 6th. I told them, don't get out. Do not get out. Tesla at that time was about $291. I said, don't get out. The specialists, the market makers, rather, they're going to push that market up. And let me tell you, they're not going to go against Tesla. They're going to be pushing that market. And thank God we didn't get out. And we bought it right in what they call the sweet spot. Every stock has a sweet spot, if you know that or not. They don't want you to know that. A sweet spot is risk off. Every stock has a risk off sweet spot. That's where you buy. If you stay with the same 6 stocks all year, you'll always rotate back to that sweet spot. Usually you'll rotate 3-4 times a year. So you only need 6 stocks. And then that will always rotate back to you. And that's how you make money in the market. It's all about pricing. So Tesla right now, be very careful. Tesla, when it takes out this, it's at a high right now. Or let's see, I think the high was somewhere around 488. 488. We're around 434. So I'd be taking my profits right now. Don't get out totally, but take the majority of your profits, put them in your pocket, okay? Because to get above that high of December 2024, that's going to be a big battle, okay? A big battle. Now, if it does, this thing will really take off because it's above all 3 moving averages, okay? So keep your eye on Tesla. That's a big mover. That's a market mover, okay? Now, if you look at, again, the MAGs, Magnificent Seven, the MAGs have been struggling to break out, okay? The MAGs have been struggling to break out. Now, what will help the MAGs, if you look at the MAGs, they've been going sideways now since September 15th, okay? September 15th, they've been going sideways. Now, the reason what's going on is the dollar, okay? So the dollar keeps getting, is starting to move back up off its low. That's not good for tech stocks. So you got to be very careful. Watch that dollar. See if it's going to break out. We have a beautiful consolidation going sideways. And matter of fact, the consolidation on UUP, I'll just put it up here for you, show you. UUP. Okay, here you go, UUP. Well, I always watch UUP like a hawk, especially for my emerging markets. We did beautiful with EEM. We made nice profits on EEM, but I told everybody today, with the dollar going up, take most of your profits off EEM. If the dollar breaks above the high, okay, above the high around 28, okay, 28.72, let's say 28. If it breaks above that with good volume and keeps going up, that means your tech stocks are going to correct big time. Your gold stocks are going to correct big time. So you really got to watch that dollar. And again, if you bring it back, okay, you can see it's been going sideways now since somewhere around since August, about August 14th. So she's consolidating here. We've had a terrific downtrend. And watch those bonds. People aren't understanding how the bond market works. They don't understand how deficits work. See, Wall Street doesn't want you to know how it works. Okay?
1 minute.
And again, remember, if you watch your bond market, okay, and the bond market will tell you everything you need to know. All right, it'll tell you everything you need to know. So in other words, when bonds are rising, okay, okay, you're going to have a correction in the stock market. It'll never fail you. You're going to have a correction, okay, when bonds are rising, okay, you'll have a correction. And the stocks that benefit aren't tech stocks, it's the value stocks, okay? Right now, tech stocks are relying on, okay, they're watching that bond market and they're hoping like crazy that yields will keep coming down. And they've stopped coming down now. They're going back up. That's going to hurt the bond market big time. So watch the bond market. If the yields are rising, it implies a correction. It implies that tech stocks are going to have a problem, okay? The market tells you everything you need to know. You just got to know how to find it. It will help you do that, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.